Okay, what if you could just cut through all that market noise? You know, the endless headlines, the constant chatter, and get right to the essential stuff, the actionable insights about a company like Roblox. Not just what happened, but why it happened and what might be next. Well, that's exactly what we're doing today. We're launching into a deep dive, specifically tailored to help you, our listener, really understand what's driving Roblox lately. We'll look at its recent performance, its financial health deep down, its big strategic moves in this fast-changing digital world, and what the market sentiment really is, our goal. To arm you with a genuinely comprehensive view, something that goes way beyond just the surface news.
Exactly. I mean, there's so much information out there, right? True understanding really comes from seeing the whole picture, putting the pieces together.
Hmm.
So today we're going to peel back the layers on Roblox's recent quarter, look at what the key experts are saying about where it's headed, and connect all those dots. What does it mean for Roblox's future, and maybe even for the bigger picture, the whole gaming and metaverse sector it's kind of leading?
And guiding us through this, pretty complex landscape, we're drawing directly from the really sharp analysis of JinLog. Now, for those who might not know, JinLog isn't just someone watching the market. They're a top trader. Their insights really seem to cut through the noise, offering this clarity that's pretty rare. JinLog uses this unique structured approach called the VPA rhythm training method. It's not about chasing every little news blip. It's actually this sophisticated system.
Oh.
It marries the rhythmic patterns you see on a stock chart with the underlying funds flow patterns, basically where the big money is actually moving. The real goal here is finding those optimal trading moments, but maybe even more importantly, it's about helping you protect your capital, protect your time from, over trading. It's about being precise, patient, using deep insight, not just reacting all the time.
Yeah, that distinction is so important. Just reacting to every headline, every little price jump or dip, that can be incredibly damaging, right? To your money and your peace of mind. JinLog's method focuses on key news, key events, sure, but critically it analyzes them alongside major support levels, what they call MAC points. It's about blending that detailed sector and stock analysis with live dynamic index monitoring. It's this whole integrated approach that allows for solid risk management while always aiming for, better, more consistent returns. It's strategic engagement, not just constant reaction.
Okay, so what can you expect from us today? We're going to unpack Roblox's fascinating journey, that incredible, almost dizzying surge it had recently, and then the pullback that followed, which is just as interesting, actually. We'll dig into its financial health, its ambitious strategic moves, especially in things like AI content creation and how market sentiment, from big institutional investors to the buzz on places like Wall Street Bets, how that all plays into its moves. So get ready for a conversation that's not just informative, but hopefully genuinely engaging and maybe even a bit surprising. All right, let's dive headfirst into the numbers then, because Roblox's Q2 FY2025 performance, it wasn't just good news. It was like a statement. They didn't just meet expectations, they completely smashed them. It was, simply put, a stellar quarter.
Oh, absolutely. It was a really powerful quarter that painted this very clear, very robust picture of growth for the platform. And when you really break down the data, the story of that success becomes incredibly clear. It shows not just expansion, but a much deeper engagement with their users.
Let's pull apart those key metrics because they're really the beating heart of this story. First up, bookings. They surged to $5.1 billion. That's a massive 51% increase year over year. I mean, 51%. For listeners who track this stuff, what's the big takeaway from that kind of jump in user spending for Roblox?
Yeah, a 51% leap in bookings. That's nothing short of extraordinary, especially for a company already at Roblox's scale. Bookings basically are the total value of Robux, their virtual currency, that users bought. It's really a forward-looking metric, reflects the immediate health of their internal economy, And the platform's potential to make money, this huge surge tells us users aren't just showing up. They're deeply invested in that virtual world. They're willing to spend real money to customize things, get virtual items, support creators they like. This isn't just growth. It's efficient, engaged monetization happening at a massive scale. It really confirms Roblox is successfully turning all that engagement into actual economic activity inside its world. That's crucial for its long-term health.
And it wasn't just about the money being spent, right? The user base itself exploded. Daily active users, DAUs, hit over 111.8 million. That's up 41%. Wow.
For a platform that's so focused on this metaverse idea, what are the really big implications of hitting that kind of scale?
Hitting over 111 million daily users. That's a huge milestone. It really positions Roblox as a leader in this whole emerging metaverse space. That kind of scale is absolutely vital because it just supercharges the platform's network effects. Think of it like a really busy city, right? The more people there are, the more opportunities pop up for business, connections, new ideas. For Roblox, it means the platform gets exponentially more valuable for creators because suddenly they have this enormous audience, which in turn pulls in even more users. It creates this powerful, like, virtuous cycle. It shows Roblox's expanding global reach, its appeal across really diverse groups, and it lays this formidable foundation for future growth and, making that metaverse vision real. It's a self-feeding loop of growth and value. But here's where it gets really fascinating for me. Hours engaged. It soared to an incredible 27.4 billion hours, a 58% increase. That number is almost hard to wrap your head around. It's like, if every single person on Earth spent 3 or 4 hours on Roblox, okay, maybe not quite, but seriously, this isn't just a number, is it? It feels like the ultimate measure of stickiness. Why is that deep immersion, those hours spent, arguably even more critical for Roblox than just the raw number of daily users?
That's a really great point. A profoundly insightful observation, actually. While DAU shows you the reach, hours engaged. That reveals the real stickiness, the depth of how immersed users are, and the genuine value they're getting from the platform. For a metaverse platform, time spent is like the gold standard. It shows users aren't just logging in quickly, they're finding compelling stuff, evolving experiences, building communities, and really integrating Roblox into their daily lives, their social lives. High engagement hours drive everything else positive. Boosts monetization chances, attracts and keeps the best developers, fuels that constant stream of user-generated content. It suggests users aren't just visiting, they're kind of living there, which is absolutely critical for the long run, for competitive advantage, and for actually achieving that full metaverse vision. It really shows the platform creates genuine, lasting value for its community.
Okay, so with those blockbuster numbers painting such a vibrant picture, how did the market react right away? I imagine the stock went on quite a ride.
The immediate reaction was, well, exactly what you'd expect. Overwhelmingly positive, almost euphoric, really. The stock didn't just nudge up, it soared. It was catapulted to a record high of $137.79 right after those earnings dropped. A clear roar of investor confidence.
And looking back a bit further, beyond just that one quarter's beat, the rally has been truly staggering, hasn't it? 116% year-to-date rally and an incredible 222% surge over the past 12 months. That's not just a blip, that's sustained, explosive long-term growth. What kind of factors come together to create that sort of powerful, lasting performance?
Yeah, that kind of explosive long-term growth usually happens when several powerful things click together, working in synergy. First, just consistent, solid execution on their big metaverse vision. Roblox isn't just a game platform. They're carefully building this foundational digital economy where users can create, share, make money from their own stuff. Second, that constantly growing user base, especially with younger digitally native kids and teens, that represents this huge future market that's really only just starting to be tapped. Third, the relentless push on innovation, especially, like you mentioned, integrating those cutting-edge AI tools for content creation. That dramatically lowers the barrier for developers and just supercharges creativity. And finally, those strong monetization trends like that booking surge showed so clearly, proving they can effectively turn deep engagement into real revenue. All those things together have woven this powerful long-term growth story that smart investors are really buying into.
So we've got this incredible surge. The stock hits a record high, even briefly touches a short-term target of $150. But then, almost predictably, it pulled back. We saw it dip to $125.40. And according to JinLog, this was driven by index-wide profit-taking. Now, this might seem counterintuitive to a lot of people. How do we separate this kind of natural market cycle from, say, a real warning sign about the company itself?
That's a really astute question, and it's fundamental to understanding how markets work. Profit-taking. It's a perfectly natural, very common thing. After a stock makes a big, fast run-up, especially after amazing news like that earnings beat, lots of investors who bought in lower decide, okay, time to lock in these gains. They sell their shares to realize the profit. And when a whole bunch of investors, especially big institutions, do this at the same time, it creates this wave of selling pressure, pushes the price back down. It's like the market just exhaling, digesting a big move up. Now, if this pullback came with actual bad news, like a sudden drop in users, missing revenue targets, some negative strategic shift, then yeah, totally different story, red flag time. But when it's described as index-wide profit-taking, it signals a broader market thing, a rebalancing across lots of stocks. Not a specific problem with Roblox's fundamentals. It's just a healthy, if sometimes uncomfortable, part of the market cycle.
Okay, so what we saw with Roblox, that dip from $137 down to $125, was basically the market catching its breath after an amazing sprint, not really a sign of underlying weakness. That's a crucial difference for listeners to get. And JinLog also briefly mentioned something interesting. about gaming and entertainment maybe deserving long-term spots in portfolios, setting the stage for deeper talks in their upcoming truth versus false content. That sounds like a fascinating, bigger idea.
It absolutely is, and it hints at a much larger investment thesis, beyond just Roblox's day-to-day stock moves. While profit-taking is short-term market stuff, JinLog's upcoming Truth versus False piece will likely dig into why the broader trends in gaming and entertainment, driven by metaverse tech, AI, changing ways people consume media, might deserve a fundamental long-term rethink for a portfolio allocation. It suggests these aren't just cyclical industries anymore, but they're undergoing these big structural shifts that make them increasingly compelling for long-term money. It's about looking past the short-term noise to see the huge industry transformation underneath.
That's a perfect lead into our next segment, which really gets into JinLog's strategic guidance across different investment timelines. Because when you're looking at a dynamic, high-growth stock like Roblox, your own personal time frame really dictates the best strategy, doesn't it?
It's the absolute foundation. JinLog stresses this constantly, carefully breaking down their approach into short-term, swing, and midterm horizons. Understanding your own investment time frame. It's non-negotiable. It fundamentally dictates your risk tolerance, how long you plan to hold something, and, most importantly, the specific moves you should make. A strategy that's perfect for a day trader buzzing in and out would be completely wrong, maybe even disastrous, for a long-term investor trying to build wealth over years. It's all about aligning your approach with your goals.
Okay, so let's start with the short-term strategy. After that amazing run-up and hitting the $150 peak, JinLog advises taking profits. Again, for someone maybe newer to trading, why on earth would you take profits on a stock that's doing so incredibly well? It feels almost wrong to sell when things are going great.
Yeah, it can definitely feel counterintuitive, especially when emotions are high after a winning trade. But in short-term trading, taking profits at set targets or after big moves up is just a core principle of disciplined risk management and preserving your capital. Think of that like a sprinter. They push hard, cross the finish line, then they stop and recover, right? After a rapid climb, a stock like that runner often needs to consolidate or pull back. By taking profits, you're not just cashing in, you're protecting the gains you've already made from any immediate pullback, like that profit-taking wave we just discussed. For short-term traders, the game is consistency. Grab smaller, more frequent gains and avoid giving them back. Don't just hope for the absolute peak that's almost impossible to time perfectly. It's about being strategically agile.
And then after locking in those profits, the advice is to watch patiently for support retests before even thinking about getting back in. Can you maybe paint a clearer picture of what a support retest actually looks like on a chart for our listeners?
Sure, a support retest is a fundamental idea in technical analysis. Imagine a floor in a building, okay? A support level is a price point where a stock is historically found a floor, meaning buying interest tends to show up there, stopping the price from falling further. When a stock pulls back after a run-up, it very often comes down to retest these previous support levels. If the price hits that level and then holds strong, bounces off it, that confirms the strength of that support. That then becomes a potentially attractive spot to get back in for traders who think the stock's going to head back up. It's about waiting for the market to give you a clear signal that the downward slide has, at least for now, stopped, waiting for that bounce off the floor.
And currently, JinLog points out that trying a short-term entry right at $125 where Roblox pulled back to is particularly risky because there might be more downside. What specific things contribute to that extra risk, even for a hot company like Roblox?
Right, the higher risk at $125 comes from a few things working together. First, that ongoing profit-taking means there could still be sellers hanging around, pushing the price lower before a real stable bottom forms. Second, just technically speaking, $125 might be in a sort of no man's land on the chart. It's not the old peak, but it's also not a really strong, historically proven support level. It lacks that clear floor that signals a high probability bounce. And third, as we'll get into with the rhythm analysis, the short-term trend and the underlying funds flow might still be showing weakening signs, making a strong bounce uncertain until we see clearer buying signals, especially from big institutions. It's just a zone of continued uncertainty for quick trades.
Okay, so if that's the short-term view, how does the swing strategy differ? JinLog is looking to buy at more established support levels like $112 or maybe even $100 and aiming for a rebound back towards $140. What really defines a swing trade and how does it balance those quick opportunities with slightly longer holds?
A swing trade kind of sits in that sweet spot between really fast short-term trading and long-term investing. It usually means holding a position for maybe a few days, a few weeks, sometimes even a couple of months. You're specifically trying to profit from those short to medium-term price movements, the swings, within a larger trend. Unlike super short-term trading that might focus on moves within a single day, swing trading aims to capture bigger price moves. By waiting patiently for those more reliable support levels like $112 or $100, swing traders try to get in at a lower risk point after a decent pullback. They're anticipating a solid bounce back towards previous resistance levels or set profit targets, like that $140 mark. It's about balancing quicker opportunities with slightly longer hold times, trying to ride a distinct swing in the price, but with a disciplined plan for getting in and getting out.
That naturally leads us to the midterm strategy, which really seems to embody a long game approach for Roblox. Here, the advice is to accumulate shares in tranches around the $88 level. Could you demystify what tranches means for our listeners and explain exactly why this phased buying strategy is so helpful, especially for long-term investors in a potentially volatile growth stock?
Sure, tranches is just a fancy way of saying buying in stages or portions. Instead of throwing all your investment money into a stock at one single price, you divide your total investment into smaller bits. And then you buy those bits at different price points, often as the stock dips to certain levels you've already decided on. This phased approach significantly cuts down risk for long-term investors, particularly with dynamic growth companies like Roblox. If the stock keeps falling after your first buy, you still have capital left to buy more at even lower prices, which brings down your average cost per share. It takes away the pressure of trying to perfectly time the absolute bottom, which is almost impossible to do consistently anyway. Instead, it lets you build up a solid position gradually, riding out the bumps while steadily improving your average entry price. You build conviction over time this way.
And this midterm strategy specifically leverages Roblox's big metaverse growth story and its innovative AI content tools as fundamental long-term drivers. This sounds like it's really rooted in a belief in the company's core vision, not just a reaction to the stock chart.
Precisely. This strategy is fundamentally built on strong belief in Roblox's long-term direction. It's not a short-term bet on a quick bounce. It's an investment in the company's core mission. Its leadership in building the metaverse, its constantly growing ecosystem of creators and users, and especially its groundbreaking work in AI for content creation. Those are seen as the foundational pillars that will drive substantial long-term value. So, accumulating in tranches isn't just a technical trick. It's a methodical, risk-managed way to build a big position in a company whose core business and future potential are seen as exceptionally strong. It lets long-term investors truly capitalize on those huge multi-year themes, the metaverse, the AI revolution, without getting spooked by short-term market swings.
Okay, to really anchor these strategies, we need to decode the chart itself, right? JinLog uses these MAC points to highlight major support levels. Current price is around $125.40. Can you bring these MAC points to life a bit? Like the swing MAC point at $87 and the midterm MAC point way down at $54. How are they more than just lines on a graph?
Right, midpoints aren't just random lines. They're like historical battlegrounds on the chart, identified through JinLog's VPAR method, where that funds flow analysis shows institutional money has stepped in before. Think of them like strategic strongholds on a price map. If the price gets there, a significant defense-strong buying interest is expected to show up. The swing MAC point at $87, for example, isn't just a past low. It's a calculated zone where JinLog expects a powerful rebound, driven by institutional money re-entering for a decent swing bounce. It's a level where the risk versus reward for short to medium-term trade looks really attractive because the chance of a strong reaction is high. The midterm MAC point at $54, well, that's like the ultimate war chest level for long-term accumulation. If Roblox ever touched that, it would signal, according to JinLog's analysis of its fundamentals and long-term growth, that it's deeply undervalued. That's where the most patient strategic capital would likely be deployed for multi-year gains. These points aren't arbitrary. They come from deep analysis of market structure and how money moves.
And it also emphasizes that the box range bottom provides optimal tranche buy opportunities, reinforcing that midterm strategy. So it's about looking for those deep value zones for the long haul, almost like finding a diamond in the rough, but with a calculated plan.
Exactly. The box range bottom is typically a very strong, often multi-year, established support area that marks the lower boundary of a stock's long-term trading range. When the price dips into that zone, especially for a high-growth company with strong, improving fundamentals like Roblox, it's seen as a prime, lower-risk chance for long-term investors to start buying or add to their positions in tranches. This strategy fits perfectly with the midterm outlook because it lets investors build positions at levels that historically have been major turning points for sustained climbs. It allows them to minimize their average entry cost over time and get positioned for the next big growth cycle. It's really about patience meeting opportunity.
Okay, here's where JinLog's VPA method really seems to shine. It's not just about static price levels, it's about understanding the market's underlying rhythm, its very pulse. How does this rhythm analysis methodology give a deeper, more dynamic view of market moves by looking at chart rhythms and funds flow patterns, going way beyond just simple price action?
But what's really different here is that VPA goes beyond just looking at candlesticks or basic trend lines. It's this sophisticated mix of multiple dimensions. First, the actual price rhythm, how the price is moving in terms of volatility, momentum, its oscillation patterns. And second, crucially, it integrates the funds flow patterns. These are the telltale signs of where institutional money, the smart money, is actively moving. By combining these, VPA tries to spot subtle shifts in market sentiment, underlying strength or weakness that simple price watching might totally miss. It's like listening to the complex music of the market, understanding not just the notes, but the timing, the harmony, and where the big instruments are really leading. It's about understanding that subtle, often subconscious pulse across different time frames.
So let's break down those rhythms across our different time frames, starting right now. For the short-term rhythm, JinLog notes the trend is declining or correcting, the rhythm is weakening, correcting, and funds flow is weakening or transitioning. What does this pretty cautious picture imply for Roblox's immediate short-term moves?
Yeah, that paints a very clear and indeed very cautious picture for the immediate short term. When the trend is down and both the price rhythm and the underlying funds flow are weakening, it's a strong signal that selling pressure is winning out and there isn't significant new aggressive money coming in to support the price. The transitioning funds flow adds to that, suggesting money is either actively leaving short-term positions or just sitting on the sidelines uncertain. This totally reinforces the earlier advice. It's a time for short-term profit-taking and avoiding jumping back in right away because there's a high chance of more downside or just sideways chop. It's signaling that for the very near future, the path of least resistance is probably down or sideways as the market tries to find a temporary balance.
Moving to the swing rhythm, we see a different, more nuanced picture. The trend is described as accelerating or maintained, but the rhythm is weakening or correcting, and funds flow is initiating or in formation. This sounds like a bit of a mixed signal, doesn't it? What's it really suggesting about Roblox's underlying strength despite this current correction?
This mixed signal is actually incredibly insightful, especially for swing traders. The accelerating maintained trend suggests the underlying momentum from Roblox's strong Q2, and that bigger metaverse growth story is still fundamentally there on a swing time frame. That's the main current pulling things forward. However, the weakening correcting rhythm shows that even within that bigger positive trend, the current price action is going through a necessary, maybe even healthy, pullback. The key here, the little glimmer of future potential, is the initiating formation funds flow. This suggests that while some profit-taking might still be happening, new strategic money is starting to position itself or form a base. It implies the current dip is attracting new, smart buyers who are starting to build positions, possibly signaling that a solid base is being formed for a future move up. It's like that quiet accumulation before the next big leg higher, even if the price hasn't totally bottomed out just yet.
And finally, the midterm rhythm. Here, the trend is, again, accelerating or maintained, the rhythm is weakening or correcting, and funds flow is weakening or transitioning. Now, this might seem a bit similar to the short term in some ways, but the implication for the midterm strategy is totally different, isn't it?
If you really connect this to the bigger picture, the midterm rhythm powerfully reinforces that long-term accumulation strategy we talked about. Despite the current shorter-term corrections and the temporary weakening of funds flow within them, the fundamental midterm trend for Roblox remains decisively positive. This implies that the overarching, compelling growth story of Roblox in the metaverse, its innovative path, is still incredibly strong. It's reserved. The weakening transitioning funds flow in the midterm view might represent institutions rebalancing, bigger players consolidating, or even smart money just getting ready for the next major leg up in a long-term bull market. It strongly supports the idea of buying in tranches on strategic dips, precisely because the underlying powerful momentum for sustained multi-year growth is fundamentally intact. It's like the ebb and flow of a healthy rising tide.
So, by analyzing these different time horizons through the lens of JinLog's VPA rhythms, it gives you this truly holistic view. You can understand the immediate volatility that means you need to be careful short term, but also see the powerful underlying long-term potential that supports a more patient, accumulative strategy. It's like seeing the whole forest, understanding how each tree is moving and predicting where the next growth spurt will be all at once.
Exactly. This integrated, multi-time frame understanding is precisely what helps investors avoid those emotional reactive decisions driven by short-term noise. Instead, it lets them align their actions with their specific investment horizon, backed by a full understanding of both price action and those subtle but powerful underlying capital flows. This integrated view is what JinLog aims to provide with VPAR, allowing for more disciplined, more confident, and ultimately potentially higher return decisions for anyone engaging with the market.
Okay, let's shift gears a bit now. We've peeled back the layers on Roblox's operational wins and the market's initial kind of wild reaction. But to really know if this company is built on solid rock or maybe shifting sand, we need to go beyond the amazing user numbers and really look at its financial backbone. This is often where the real truth about a high-growth company lies, right? Does it show it's just a popular fad, or is it a self-sustaining powerhouse building for the long haul?
And this brings up a crucial question for a lot of people. How can a company be so successful with users and bookings, but still report what looks like a pretty big net loss? It's a nuance that often confuses people, understandably, but it's absolutely key to understanding high-growth tech companies.
Right. The source highlights a GAAP net loss of $1.1 billion and a non-GAAP net loss of $194 million. Can you break down GAAP for us first and explain why these seemingly huge losses are often just a strategic part of the journey for a high-growth company like Roblox?
Sure. GAAP stands for Generally Accepted Accounting Principles. They're the strict, standard rules companies have to follow when they put together their financial statements. High-growth companies like Roblox often report big GAAP net losses, not because their core business is failing, but because they are investing heavily and strategically in their future. Think of it like planting seeds for a massive future harvest. This includes huge spending on R&D, like all those new AI features, the infrastructure for a real metaverse, constantly innovating the platform. They also spend aggressively on marketing and user acquisition to grow that already massive user base globally and on scaling up their complex worldwide operations. These are all legitimate, forward-looking business expenses, totally crucial for long-term growth and market dominance. But under GAAP rules, they hit the profit line in the short term, even if they're building immense long-term value. It's basically the cost of hypergrowth.
And then we hear about these non-GAAP figures, like that $194 million net loss. Why do companies even bother reporting these, and what's the difference they're trying to show compared to the standard GAAP numbers?
Companies usually report non-GAAP figures to give investors what they feel is a clearer, maybe more representative picture of their core operational performance. They strip out certain accounting complexities that might cloud the view of the underlying business health. A really common thing they exclude is stock-based compensation. That's a big non-cash expense for many tech firms. It hits GAAP net income, but it doesn't involve actual cash leaving the company. By showing a non-GAAP number, they try to highlight performance without these specific non-cash or maybe one-time items, offering a view of profitability from just the ongoing business activities. It's an attempt to give a truer sense of the day-to-day operational efficiency without the noise of certain accounting entries.
But here's the real game changer, in my opinion, the number that really cuts through all that accounting stuff. Roblox reported a strong positive operating cash flow of $942 million. Why is this specific number so incredibly important? What does it tell us about the business's fundamental financial strength, even when you see those net losses on paper?
This is absolutely critical. It's the linchpin of their financial story. Operating cash flow is the actual cash generated by a company's normal day-to-day business operations. The fact that Roblox has a strong positive operating cash flow of nearly $1 billion proves definitively that the underlying business is financially robust and, most importantly, self-sustaining. It shows that even if GAAP accounting classifies big investments as short-term losses, the company is generating substantial real cash from its users and operations. That cash can be immediately reinvested into more growth, used to build up reserves, even pay down debt. It signals a healthy, dynamic, viable underlying business that isn't just burning through outside money to survive. It's funding its own ambitious expansion from its own successful operations. It's the strongest sign of sustainable growth for a company like Roblox.
And on top of that, they're sitting on a massive $4.74 billion in cash reserves. What does having such a huge cash pile, basically a war chest, allow Roblox to do? In terms of innovation, expansion, or even just weathering tough economic times, sounds like immense strategic power.
Having nearly $5 billion in cash reserves provides truly immense strategic flexibility and resilience. Think of it as this deep reservoir of ready capital. It empowers Roblox to keep making those heavy strategic investments in crucial areas like R&D for cutting-edge AI, accelerating metaverse development, all without needing to raise more money from investors, which can dilute current shareholders. It also gives them the power to go after strategic acquisitions, expand aggressively into new international markets, or just double down on exciting initiatives whenever they want. Critically, it provides a huge buffer to absorb and weather potential economic downturns, unexpected competition, or even regulatory changes. It ensures the company can keep pursuing its long-term vision even during lean or uncertain times. It's a clear sign of profound financial strength, strategic options, and long-term stability.
Beyond cash, let's talk user monetization. This is where all that engagement and innovation actually turns into value. Bookings per DAU rose to $12.86, up 7%. This seems to show Roblox is getting better, more efficient at making money from each daily user.
Yes, it absolutely does. A steady rise in bookings per DAU shows that not only are more users joining, but each user is, on average, contributing more effectively to the platform's economy. This better monetization efficiency can come from several things. Maybe more compelling user-generated content, more attractive virtual items to buy, or just smoother ways to spend money within the platform. It's a very positive sign that Roblox isn't just attracting users, but it's getting increasingly good at turning that deep engagement into actual spending within its vibrant virtual economy.
And then we have 23.4 million monthly paying users. That's a very significant and crucially growing base of people actively spending real money. And their average bookings per monthly paying user was $20.48. What does that average spend really tell us about how willing Roblox's paying users are to invest so consistently in virtual stuff?
Well, those 23.4 million monthly paying users represent a substantial and maybe more importantly, deeply loyal slice of their huge user base. These are people actively and repeatedly participating in the platform's economy. The average booking per monthly payer of $20.48, that's particularly revealing. This isn't just pocket change, right? It shows a strong, sustained willingness from these users to invest meaningfully in virtual experiences, personalized avatars, unique digital items. It suggests users find real, lasting value in the virtual goods and experiences on Roblox, and they're committed to enhancing their time on the platform. This kind of consistent, recurring spending from a dedicated user base is absolutely vital for the long-term sustainability and growth of the platform's creator economy. It's proof of the perceived value of digital assets within Roblox.
Finally, what does it really signal to the market when a company takes the bold step of raising its annual bookings guidance? Roblox raised theirs significantly from around $5.3 billion up to nearly $6 billion, implying an impressive 36% growth. And why is 36% growth for a company already Roblox's size such a strong indicator of its momentum?
When a company raises its financial guidance, especially by that much, it's an incredibly strong vote of confidence from management in how they expect to perform going forward. It signals to the market that their internal projections, based on current trends and future plans, point to continued robust, even accelerated growth. For a company already as big as Roblox to project 36% growth year over year, that's nothing short of exceptional. Usually, companies see growth rates naturally slow down as they get bigger, so maintaining such a high growth rate indicates powerful, lasting demand for their platform, really successful strategic execution, and a large market they can still effectively grow into. It's a profoundly bullish signal that says a lot about their future path and confidence.
So, summing up the financial health. Despite those gap losses that can sometimes look worrying if you don't dig deeper, Roblox clearly shows solid, self-sustaining financial health. It's driven by immensely strong cash generation and growing, efficient monetization. It really points to a robust, dynamic, underlying business that's funding its own growth.
Absolutely. That strong, positive operating cash flow and the huge cash reserves, combined with rising per-user monetization and the raised guidance, they effectively override any surface-level concerns from the GAAP net loss. It paints a clear picture of a company investing aggressively for huge future growth, but doing it from a position of real financial strength, not weakness. It's a sign of a well-managed, future-focused company.
Okay, now let's talk about some key news, potential risks, and strategic things that are really shaping Roblox's future path. First up, institutional confidence. JinLog noted that Kathy Wood's fund focused on disruptive innovation significantly boosted its Roblox weighting to 7.39%. What kind of signal does it send when such a well-known institutional investor increases its stakes so much?
Well, what's really fascinating here is the ripple effect it can have. When a prominent investor like ARK Invest, a firm known for betting big on disruptive tech, significantly ups its stake in a company, it sends this powerful, unambiguous signal to the whole market. It's not just a casual buy. It shows strong, deep conviction in Roblox's long-term vision, especially its leadership in building the metaverse, and its potential to be a foundational piece of future digital economies. It reinforces that strong institutional demand and suggests that large, sophisticated investors believe the company might be undervalued right now relative to its huge growth prospects, even with short-term bumps. It's a very public vote of confidence that often gets other big funds and even individual investors to take a closer look, potentially driving more demand.
And speaking of disruptive innovation, the power of AI in content creation seems like a massive game changer for Roblox. They launched Cube 3D AI tools and the Mesh Generation API. Can you explain how these tools are speeding up creator-driven 3D content production? How is AI basically empowering individual creators to build way more complex, immersive experiences than before?
Oh, these AI tools are nothing short of revolutionary for creating stuff on the platform. They fundamentally shift the creative landscape. The Cube 3D tools and the Mesh Generation API use advanced AI to dramatically automate and simplify some of the hardest, most time-consuming parts of 3D modeling and building environments. Imagine a young developer, maybe just a passionate high school kid, who used to need months, maybe years, to learn complex 3D software just to make one complicated object or scene. Now, with these AI tools, they can just describe what they want or maybe sketch a basic idea, and the AI generates sophisticated 3D models, textures, even whole environments, like almost instantly. This doesn't just lower the barrier to entry, it explodes the potential for creativity and complexity. It means a much wider range of creators can now build more complex, visually rich, deeply immersive experiences without needing a pro studio or huge teams. It's truly democratizing sophisticated 3D creation, which will inevitably lead to an explosion of high-quality content on the platform.
And TechCrunch also reported that Roblox is making Cube open source. Why is an open source approach like this so incredibly critical for building a really vibrant, engaged developer community and ensuring Roblox keeps its innovation edge long term?
An open source approach is absolutely, unequivocally critical for supercharging a vibrant developer ecosystem and ensuring long-term self-sustaining innovation. When core tools are open source, developers can freely access them, modify them, build on top of them. This doesn't just speed up their own work, it actively encourages amazing collaboration and collective problem solving across the whole community. It lets thousands of smart people contribute improvements, build new features, adapt the tools in ways the core Roblox team might never have even thought of. It decentralizes innovation, making the platform incredibly agile, adaptable, competitive. Plus, it naturally attracts a broader base of talented developers who are often drawn to platforms offering that flexibility, transparency, and collaborative potential. It ensures Roblox stays relevant, keeps evolving, and maintains its competitive advantage. It's a strategic masterstroke for community building.
Beyond the exciting new tools, just sustained user engagement from popular premium titles continues to be a core driver, right? JinLog mentioned titles like Grow a Garden and 99 Nights in the Forest. What does the ongoing success of these kinds of titles mean for Roblox's ability to keep users sticky and attract new ones consistently?
Yeah, the continued consistent success of premium titles like those is absolutely foundational for keeping users engaged and constantly attracting new ones. These aren't just quick viral hits. They're examples of experiences that keep users coming back day after day, quarter after quarter, building real loyalty. This shows that Roblox's content pipeline, whether from their own teams or, more often, from their incredibly creative developer community, is consistently delivering high-quality, engaging experiences that really click with users. It provides proof that the platform can continuously refresh its appeal, offer new things, offer depth, which is vital for long-term engagement. It's also key for turning casual users into active and, importantly, paying participants. These successful titles are basically tangible proof of the platform's amazing content vitality and its magnetic pull.
And just to circle back to an earlier point, JinLog's upcoming Truth versus False segment is going to make a strong case for long-term gaming and entertainment allocations. This really underlines the significant, maybe even paradigm-shifting opportunities they see in this whole sector, way beyond just Roblox.
It does indeed. It suggests these individual success stories, like Roblox's amazing run, aren't just isolated things, but part of a much larger fundamental transformation happening across gaming and entertainment as a whole. This shift is driven by big tech advances like AI, maturing virtual economies, and changing consumer habits that blur the lines between just consuming and actively participating. That upcoming content will likely highlight why these sectors aren't just passing trends, but potentially essential long-term parts of diversified investment portfolios, given their incredible innovation, rapidly growing markets, and increasingly sophisticated, sticky ways of making money. It's about seeing the whole sector as a new frontier for value.
All right, now let's try to bring it all together by looking at how JinLog applies their strategic scenarios. connecting our earlier analysis of performance, financials, rhythms, to actual actionable trading strategies across those different time horizons. This is where the theory meets practice.
This is exactly where the rubber meets the road, right? How all the insights from deep financial data, complex chart analysis, subtle rhythm analysis translate into concrete, disciplined actions for investors, carefully tailored to their individual holding periods and risk tolerance.
So for the short-term strategy in practice, JinLog advises using split sell strategies after hitting peaks. What exactly is a split sell in the real world, and why is it such a useful, disciplined way to manage risk and lock in gains in volatile markets? A split sell is a really disciplined, pragmatic way to take profits, especially effective in dynamic, fast-moving situations. Instead of trying to sell all your shares at once when a stock hits your target or shows the first sign of turning around, you systematically sell in multiple smaller portions, or splits. For instance, you might sell a third of your position at the first big peak, maybe another third if it keeps going higher, or hold steady up there, and then hold the rest. This strategy is super useful because it lets you consistently lock in gains while still keeping some skin in the game, so you don't totally miss out if the stock surprises you and keeps running higher. Crucially, it significantly reduces the risk and stress of trying to perfectly time the absolute top, which is almost impossible anyway. It's a practical way to secure profits bit by bit while still benefiting from potential extra upside, a hallmark of agile risk management.
And after that, it's about constantly monitoring market breadth and those specific VPAR rhythm signals for cues on when to re-enter. Reinforcing that analytical, data-driven approach we talked about, it's definitely not a set-it-and-forget-it thing. Exactly. It's an active, agile management strategy. It demands constant vigilance. The short-term approach isn't passive. It requires continuous monitoring of market breadth, checking the overall health across the market, and, most importantly, reading those VPAR rhythm signals to pinpoint exactly when selling pressure eases off and new compelling buying opportunities show up. It's a dynamic dance with the market, requires nimbleness and quick adaptation.
For the swing strategy in practice, the focus is on entering at those defined support levels like $112 or $100, and then taking partial gains near $140. This really highlights a disciplined, almost surgical approach to swing trading, doesn't it? It absolutely does. This approach perfectly exemplifies a disciplined trading method by predefining both exact entry and exact exit points. That's a hallmark of sophisticated, risk-managed trading. By patiently waiting for a stock to pull back to established, historically proven support levels, swing traders aim to get in where the potential downside risk is relatively limited and the probability of a significant bounce is higher. Offers a better risk-reward setup. Taking partial gains near a key resistance like $140 ensures profits are methodically locked in, reducing that emotional urge to chase potentially fleeting gains that might not happen. It seamlessly combines technical entry precision with systematic profit-taking, aiming for consistent, repeatable returns on those medium-term price swings rather than trying to catch the whole move.
And for the midterm strategy in practice, it's all about that phased building of positions around $88 in stages, which reduces entry risk. This is a strategy that truly aims to capitalize on Roblox's huge metaverse expansion and the transformative power of its AI tools, reinforcing that long-term thematic investment. This is a textbook example of how deep, long-term fundamental belief translates into practical, risk-managed execution. By building positions at the 88 tater level in carefully managed stages or tranches, an investor effectively hedges against immediate market bumps and avoids the big risk of putting all their capital in at one, possibly non-optimal price. It's a patient, methodical strategy that strategically leverages Roblox's most powerful fundamental growth drivers, its undeniable leadership in metaverse expansion, and the game-changing power of its AI tools for creators. This approach lets the investor accumulate shares thoughtfully over time, consistently getting a better average price, and positioning themselves to fully benefit from what's seen as a multi-year, paradigm-shifting growth story. It's investing with conviction, but executing with caution and discipline.
Beyond charts and financials, community sentiment plays a huge, often underestimated role in how markets move. It's the pulse of the market, isn't it? And JinLog specifically highlighted the energetic activity in Roblox's developer ecosystem.
Yeah, what's really fascinating there is the palpable buzz, the vibrant activity you see on platforms like the Roblox Developer Forum and Reddit's Roblox Dev. Creators there aren't just passively involved, they're incredibly excited, almost euphoric about the new Q AI tools and the expanded opportunities these things unlock for them. This isn't just idle chatter, it's a profound indicator.
Why is the enthusiasm and just the sheer activity level of the developer community such a crucial leading indicator for the overall health and innovation of a platform like Roblox? It seems intangible, but it clearly matters a lot.
It is absolutely critically important as a leading indicator, maybe one of the most vital for a user-generated content platform like Roblox. For a platform like this, the health, vibrancy, and passion of its developer community directly translates to the quantity, the quality, and sheer variety of content available to users. If creators are excited, actively experimenting with new tools, passionately building, it means a constant flow of more compelling, immersive experiences for users. This, in turn, directly drives user engagement, fuels monetization, and magnetically attracts even more new users. A buzzing, innovative developer community signals a strong, continuously evolving platform ecosystem where real innovation is happening at the grassroots level organically and fast. It's the powerful engine that fuels Roblox's growth, ensures its long-term competitive edge in the metaverse, and guarantees a constantly refreshed, dynamic user experience. Without it, the platform just stagnates.
And then on the retail investor side, specifically from those often lively communities like Wall Street Bets, the sentiment remains overwhelmingly bullish, right? With pervasive buy the dip calls really outpacing any profit-taking worries. Can you explain this buy the dip phenomenon a bit more and why this particular community vibe highlights the ongoing need for short-term volatility management?
Yeah, the buy the dip thing is a deeply ingrained feeling among many retail investors, especially visible on platforms like Wall Street Bets. It's the belief that after a stock drops significantly, it's an attractive chance to buy shares at a perceived discount, with a strong expectation of a bounce back to old highs or even higher. It's largely driven by this powerful, often unwavering belief in the company's long-term prospects, regardless of short-term market swings. However, this collective, often passionate bullish retail sentiment can, paradoxically, fuel rapid, intense short-term volatility. While it can definitely push prices up fast and hard, it also means these quick rallies can be followed by equally swift, sometimes unexpected pullbacks as some dip buyers quickly take profits. Creates this cycle of sharp rises and falls. This dynamic absolutely underscores why disciplined short-term volatility management, exactly like JinLog's split sell strategies, is essential, even when the overall long-term feeling is super positive. Retail enthusiasm, while powerful, can create very dynamic, often unpredictable short-term price moves.
Okay, to add yet another crucial layer of analysis, JinLog also uses Elliott wave theory. For those of us maybe not familiar, how would you briefly but accessibly explain this fascinating technical method that suggests market prices move in these discernible, predictable wave patterns?
Elliott wave theory is this captivating technical analysis approach that suggests something compelling. Market prices don't just move randomly, but rather in predictable repeating patterns called waves. These waves are thought to reflect the collective psychology of everyone in the market, that ebb and flow of optimism and pessimism. The theory suggests that by recognizing these recurring fractal patterns, which look like crests and troughs on a chart, you can gain insights into where prices might head next. It typically identifies sequences of impulse waves, 5 waves moving with the main trend, followed by corrective waves, 3 waves moving against the trend. It provides this profound framework for understanding the underlying structure of market movements and anticipating potential turning points. It makes it a powerful tool for technical analysts trying to forecast price action. It's almost like trying to decipher the market's hidden language.
So how does JinLog apply this intricate theory to Roblox right now? For the short-term wave outlook, it's currently seen as being in a wave 4 corrective phase, often described as having traps unresolved and rhythm weakening. What exactly does a corrective phase mean in Elliott waves, and what are the implications of being in wave 4?
Right, in Elliott wave, a corrective phase is a period of price movement that usually follows an impulse wave and moves against the bigger prevailing trend. It's the market's natural pause or retreat after a significant move. Wave 4, specifically, is a common and often complex corrective wave. It doesn't usually involve sharp, dramatic reversals, but more sideways movement, maybe prolonged consolidation, or a moderate pullback. It often frustrates traders because it lacks clear direction. The description, traps unresolved and rhythm weakening, suggests that within this corrective phase there might be false breakouts or breakdowns moves that temporarily trap impatient traders, and the overall momentum, as VPAR shows, is fading. This powerfully reinforces the cautious short-term outlook we got from the VPAR rhythm analysis earlier. It basically means the market is actively trying to find its footing, digesting the previous big move up, before potentially starting its next major phase.
Then, for the swing wave outlook, it's transitioning into wave 3. And this is particularly interesting because it suggests a strong potential resumption of upward momentum. Why is wave 3 often seen as the strongest, the most powerful, and typically the longest wave in an impulse sequence?
Wave 3 is, without a doubt, often considered the most powerful and extended wave in an impulse sequence. Why? Because it's typically the phase where broad market participation really kicks in, where the trend gains widespread recognition and belief. After the initial skepticism maybe of Wave 1 and the corrective pullback of Wave 2 that shakes out the weak hands, Wave 3 is often fueled by widespread acceptance that the trend is real. It's often driven by strong, positive fundamental news, solid earnings, compelling strategic moves. It's when institutions, and then the general public, jump in with conviction, leading to a strong, sustained, often explosive move up. So a transition into Wave 3 for Roblox on a swing time frame suggests that after this current necessary corrective pullback, there's a powerful technical basis for a renewed, maybe even stronger upward move, supported by growing market agreement.
And looking at the midterm wave outlook, an early wave 3 formation is underway, and this is described as being likely strengthened by new game releases and those innovative AI-based content tools. So this beautifully connects the highly technical Elliott wave analysis directly back to the fundamental drivers of Roblox's actual business.
This is a perfect, almost textbook example of how a technical framework like Elliott waves can profoundly align with and reinforce fundamental insights. The early Wave 3 formation on the midterm time frame provides powerful structural support for the long-term bullish case for Roblox. The fact that this wave is likely strengthened by new game releases and AI-based content tools directly ties the abstract technical pattern to the tangible, real-world strategic advancements and operational successes within the company. It suggests that the fundamental improvements in Roblox's ecosystem, the constant flow of more engaging content, the revolutionary power of its AI creator tools, aren't just isolated events. They are actively acting as catalysts, providing the underlying strength and sustainability for this technical wave pattern. It makes the technical analysis much more robust and convincing when it lines up with the fundamentals like that.
So what does this all mean when we bring together JinLog's VPAR rhythm analysis, the Elliott wave analysis, and all of Roblox's fundamental business developments? It sounds like a truly profound, multi-layered, holistic view for any investor looking at this.
It creates an incredibly profound, multi-layered understanding that is far more powerful than any single analytical approach on its own. Elliott wave gives you a structural, predictive map of potential price movements, kind of a roadmap. VPR then gives you the real-time dynamic pulse of capital flow and the immediate market rhythm, basically, the live traffic updates on that roadmap. And crucially, the fundamental analysis grounds everything in the company's actual operational performance, its financial health, its strategic direction, ensuring you're looking at a thriving business, not just lines on a chart. When all three align, as they seem to for Roblox on these longer timeframes, it builds a much stronger, more deeply convicted case for investors. It allows them to understand both the immediate, sometimes jarring volatility and the powerful, overarching long-term trends at play. It makes for exceptionally informed, disciplined decision-making.
Okay, let's wrap things up with an overarching outlook and a clear summary of the key risks, because as we all know, no investment, no matter how compelling it looks, is without potential downsides and uncertainties. On the bullish side, Roblox clearly has some very strong tailwinds pushing it forward.
Absolutely. The compelling bullish case for Roblox is firmly centered on its undeniable strong leadership position in this nascent but rapidly expanding metaverse space, and its significant, maybe even pioneering role in the broader gaming and digital entertainment rally. These factors together provide an incredibly robust foundation that should unequivocally support substantial further growth as these sectors continue their rapid expansion and just, mature. It's a company really at the forefront of a fundamental shift.
But what are the key risks that smart investors should be carefully watching as Roblox continues on its path? Because even the strongest stocks can hit unexpected bumps or stumble.
Yeah, there are a few critical risks that definitely need careful monitoring. First, just broader index corrections. Big market-wide downturns that sweep across all sectors could hit even fundamentally strong stocks like Roblox, pulling them down regardless of their own merits. Second, there's the very real risk of new titles' underperformance. If new, highly anticipated games or experiences on the platform, whether from Roblox or creators, fail to live up to huge expectations, that could directly hit user engagement and therefore monetization. And thirdly, delays in AI tool uptake by developers could slow down the platform's innovation speed and that accelerated content creation we talked about as a key growth driver.
And any of these separately or maybe even together, could trigger more pullbacks or potentially dampen that explosive growth we've been so fascinated by during this deep dive.
Precisely. While Roblox possesses truly significant upside potential, rooted in its visionary strategy and solid fundamentals, it is absolutely crucial for investors to be acutely aware of and proactively manage these potential risks. Understanding these factors allows for a balanced, nuanced perspective, empowering investors to make decisions that are not only informed, but also perfectly aligned with their own risk tolerance and long-term goals. It's about informed confidence, not just blind optimism.
So to quickly recap this truly comprehensive deep dive, we've peeled back the layers of Roblox's incredibly strong Q2 operational health. We showed how, despite those sometimes confusing gap losses, it's really driven by robust cash flow and soaring user engagement across a massive, deeply immersed user base. We've highlighted the strategic, game-changing importance of its new AI tools like Cube 3D, which are fundamentally empowering creators and fueling future growth. And we've navigated the market's ups and downs through this multifaceted analytical lens, from JinLog's powerful VPA rhythm analysis to the structural insights of Elliott wave theory, showing how these help us make profound sense of its recent surge and that inevitable pullback that followed.
And understanding these intricate layers of information, from the tiny details in financial statements to the huge trends of market psychology and tech disruption, is truly a powerful shortcut to being genuinely well-informed. It empowers you, the listener, to confidently cut through all that constant distracting market noise and get a crystal clear, actionable perspective on what's really going on.
And as we close this deep dive, here's a final provocative thought for you to chew on. Looking at Roblox's incredible success with user-generated content and its aggressive, forward-thinking push into AI-powered creation, what does this tell us about the very future of digital economies? How might those traditional lines between consumer and creator continue to blur or maybe even disappear entirely in the coming years? And what entirely new value models, what new forms of digital interaction and commerce could emerge as platforms like Roblox evolve from just being games into true testbeds for the next evolution of how we interact, work, and build communities in the metaverse? Consider how the future, it seems, is being built not just by big companies, but maybe brick by digital brick, by creators just like you and me, redefining ownership and engagement in ways we're only just beginning to really grasp.